Good morning, Wall Street winners. It is January 2nd of 2025, and we are looking at a market that is ready to take off for the new year. So this is shaped up nicely with a few days last week and earlier this week of some kind of mediocre numbers and some red numbers for index numbers for the most part. But now I think we're seeing the enthusiasm come back to the market with a new year and a new opportunity for some growth. There is some skepticism and some hesitancy here because there aren't too many years in history where the indexes have climbed multiple years in a row in the double-digit range. So we've now had 2 years in a row where the stock market has gained in the double-digit ranges, and to have 3 of those in a row, there's only been a couple examples of that. Most recently, I believe in the 80s. So we'll have to wait and see what the year turns out to look like in terms of return. But for the day and the morning, we're looking like everything is in the green. So the Dow Jones Industrial Index is up 361 points. Again, we're still a ways out from the open at 7:45 a.m. Eastern. The S&P 500 futures are up almost 60, which is close to 1%, and the NASDAQ is up over 1%, 1.15% at 244.75. So we're looking good going into the day. But again, I think January is going to be a very rocky month with the new administration coming in, with the number of expected social media communications coming out of the new president and maybe some of the folks in his administration. I think there's still a lot of things yet to be figured out. Russia's just stopped a 50-year natural gas pipeline deal flowing through to Europe. So that's putting good pressure in terms of prices going up, which is one of the things I'm hoping to see in oil and natural gas. So those prices are going up. But it is going to affect the ability for the European nations to heat their homes and their buildings over the long term, and they're going to have to find an alternate solution if that agreement doesn't get updated, which with what's going on between Russia and the Ukraine, that's all up in the air. So there's a lot of questions out there that are lingering. We'll have to see what the answers to those or solutions to those end up being. You can see here crude is up $1. It's almost near $73 a barrel, so making its way back up. That should bode very, very well today for oil refining stocks in the U.S. Looking to see that move, and then it looks like we're going to see a bit of a recovery today. The strongest so far on the NASDAQ in the tech stocks. And the VIX has dropped. I'm surprised it hasn't dropped more than just 0.27, but it's down at 17. It's still higher than I'd like to see it, but again, I think that's due to the amount of uncertainty that's out there and lingering as we enter this 2025 year. If we take a look through the stocks we cover here in the Yahoo Finance app in health and retail, you can see that Costco is getting a bit of a lift today. Lulu's getting a bit of a lift. I kind of like Lulu in the 380s here. I believe Lulu had a really good holiday season, so I'm thinking that could be a good stock to have into its first quarter earnings. We've got Dollar General, which has got a bit of a lift. Really everything here in the green. Home Depot up $2.54. And I'm liking Home Depot in the 388 range. I think that there's going to be more purchases, more home improvements done. I'm still a little skeptical that U.S. Home sales are going to continue to increase this year, only because interest rates are still kind of stuck at a higher level. And until those come down and people can get a better mortgage rate when they sell their current home and buy the new home, I'm skeptical as to how much movement we're going to see there. But there are still new home buyers, so that will certainly drive one part of that market. It looks like all the healthcare stocks are in the green as we go down. Transport in the green this morning, and then oil. I'd expect oil will have a very good day today, and it looks like most of these stocks are in the green, and some of them, Exxon up $1, Chevron up $1.35. I'd expect Valero to be up in that north of $1, maybe even to match what it did pre-New Year. So on the 31st of December, up in the $3 range, but we'll have to wait and see what happens there. Crude up, as you can see, at 72.75, and then flipping down into technology. So we had a pretty much all red on the screen on the 31st going into the market close for the new year, and now we've got a bit of a comeback being made here. So you can see NVDL is up. The Micron it took a huge hit last week, down at 84. It was up at around 89. If you look at the 5-day here, I mean, obviously this has gotten hit super hard since earnings and fell from the 110, 112 range down to the 89 range with some less than great earnings, definitely worse than expected. Now down in the 84 range, may actually be an interesting time to look at acquiring some Micron if you haven't already. CrowdStrike is up. Big movers today here. CRM is up $4. PanW up almost 3. Net. Here's a big mover, up probably about 7% here, up $7 in the pre-market, getting back up to the 114, 115 range with that move. And then you have Microsoft looking to get closer back to that 430 range. It's going to be in the 126, 127 range. AMD taking a bit of a jump. You've got really everything here in the green. Workday's up almost $5. Lam Research is coming back at $1.30. This is one that hasn't really been hit, Lam Research, which is interesting. In the last, I'm going to say 5 days, when most of tech did take a bit of a beating, it's hovered in that low 72 range. And I do think that the timing is coming around for Lam Research to probably get back up into the mid to high 80s, maybe even mid 90s within this first quarter. So I'm keeping an eye on this. I'm definitely an owner of Lam Research and a believer in it for the long term based on where we're headed with semiconductors. Broadcom's been hit pretty hard, but it's bouncing back today. You've got Meta. Meta's been hit fairly hard as well. I mean, this was a $650 stock just a few weeks ago, and it's down at 585, 586, looking like it's going to get back into the 590s. And then the one that's down is Baba, which is interesting. So the tech stocks from China, the one that we follow, we don't follow a lot, but Alibaba is red in the pre-market. And then Google making a bit of a recovery, but not necessarily what I would have expected. I would have expected to see it recover at least what it was down on the 31st, and we may still see that. I mean, it's still very early and still pre-market, but I think at 190.44 or 191, 192, I think Google's quite a good bargain. I do expect that we will have an announcement within the first quarter out of the change in administration that the antitrust suit around having Alphabet, Google's parent, remove the Chrome browser, or being asked through the Department of Justice for antitrust purposes to remove the Chrome browser and sell it off, will be just terminated, and there'll be no further interest in that with the new administration. And I think that will cause this stock to jump $20, maybe $30 in a single day if that does happen. And then the more we hear about its development of its new supercomputing chip, that in itself, as that gets proven out and goes into production and there are fewer or no bugs related to that, I think that's going to help Google as well in that quantum computing chip space. So that will be very interesting to watch. Then we get down into financials, and again, pretty much green on the screen, except for SoFi. I do think SoFi will turn around. If you can get in at SoFi at $15.30 today, down 20 cents in the pre-market, I think you're going to find that stock probably ends close to 16 or in the $16 range today. So I think, and if it doesn't, I think just holding it long term for the first quarter here as we get through earnings, you're going to be in great shape. And then down here I've been buying some Goldman lately and loving Goldman. I do like Morgan Stanley in the 120 120 range. I'd prefer it a little lower than the 125. It's up today. I think JP Morgan's a little overpriced, so I'm a little skeptical of JP Morgan up in the 240s, but I do like Goldman down in the 270, 280 range, and I do think that that stock is going to be a $650 stock by the third week of January. So I think there's a lot of momentum there, and that's where we are today. So this year, overall, I'd encourage you to be very cautious. And if you get into a stock and you want to probably be setting some stop losses this year if you're going to be an active trader and not a buy and hold trader, and you want to limit your risk exposure to the downside, and then you want to take your profits when they're there, bank those profits. And a lot of market analysts are expecting a return this year of I'm going to call it around 10%. If you can hit 10% quickly this year, I would go to cash for a period of time and wait for a sell-off, because there's no doubt there will be one, if not multiple, corrections this year. I'm not going to say the market's going to tank and we're going to go into a recession. That is not what I'm saying. But the market always pulls back. So take your profits. That's my plan for the year, is if I can get up and get to about a 10% gain by, let's say, March, then I'm going to just take the pedal off, my foot off the gas pedal, and I'm going to go to cash, and I'm just going to wait for a pullback and then get back in when it starts to recover from that pullback. Good luck in your trades. If you're liking these videos, please hit the like and subscribe button, and tell someone you know who might have a New Year's resolution about learning more about the stock market and what the overall market narrative is. Good luck today.